Michael, welcome to WealthChat.
Nice to be here.
Of course, I'm very excited that you could make it because I find you to be a very interesting person and I want to know more about you. So this is a perfect forum for that.
Well, that's good. I'm glad somebody finds me interesting.
No, you're very interesting. But before we get started, please introduce yourself.
Michael Simonetta. I'm a career entrepreneur, mostly in the financial services business. I'm currently the chairman of Evolve ETFs and do some philanthropy through my own foundation. That's basically the thumbnail at this point.
I feel you're being modest because I checked your profile and you have a lot more in your background that I found really fascinating. And I guess we can start there. For instance, in the 1990s, you had a software startup called Triversity. And I'm very fascinated by startups, tech startups before the 2000s. So share a bit about Triversity. What was it? What did you do?
Yeah, it was a company focused on point of sale software for big retailers. It was created by a friend of mine who I went to school with. And a few of us got together and we started the business, and it turned into a pretty big software business at about 400 or 500 employees. Went through the ups and downs of starting a company and grew into a pretty good company. And then we sold it to SAP in 2005, very successfully. But, starting a company from a vacuum, like starting from zero, I've done that a few times. It's tough. It's not for the faint of heart. And it's very, very difficult, more difficult than people give it credit for.
I imagine so. And I would love to dive a bit more into that. But back to Triversity for a minute. Because it was in the 90s, I'm just always very curious about the type of mindset that you need for technology, for being innovative. I would say nowadays, if someone creates an app, it's kind of like, okay, you created an app, good job, right? Because there's so much around us. But back then, there wasn't as much. So, what kind of started it all? What compelled you guys to say, we're going to create this software?
Yeah, it's more basic human behavior to some extent. Like my friend, who ended up being the CEO of the company, was working for another company at the time, and he was, and I was an accountant. I was a CPA working in public accounting at the time, and I was giving him advice. And he was talking about the frustrations of working for that particular company and the fact that it wasn't very innovative, and mentioned one day, hey, I'd like to start my own company because I have a great idea for how I can construct the software to work better. And so it started from that. And then we started talking about it. And eventually a couple of his colleagues joined him. And then we co-opted one of our friends who had more money than all of us to help fund the startup of the company. And it was really just that. Like it wasn't like the master plan to solve the world's problems. It was really a better way to do something that was already being done. And he felt like he had a better answer, a better mousetrap, and he did. And it got a lot of traction. We got some customers. We ended up being probably the biggest supplier to the U.S. military of any software supplier at the time, at least that kind of software. We had the U.S. Army, the U.S. Navy, the Coast Guard. Were all retailers. When you think about U.S. Navy and Army, these are huge retailers. They have to set up stores all over the world to look after their personnel. So like the U.S. Army is a $9 billion retailer at the time. It's probably even larger than that now. And the U.S. Navy was a multiple billion-dollar retailer as well. So we ended up being the software provider and global support network for that point of sale. So I used to joke with my partner that we were going to get a visit from the CIA because we could easily create a disruption to the U.S. military by changing the software, and we wouldn't be able to transact anywhere across their installation. So it's interesting. And eventually we hit the 2000 era. We could sense that things were shifting. SaaS was a new thing back then, and we could sense that things were going from license model to a SaaS model, and we did an acquisition at the time using up some of the capital that was available to tech companies in the run up to 2000, and then we lived through the crash in 2000, which wasn't a great thing. It affected our business. We had to take a few steps backwards. We had to restructure. We had to raise some additional capital, but the CEO at the time did a good job of refocusing the business, and we eventually got an exit to that business to SAP. At that point, SAP and Oracle wanted to get into retail, so it was just they started competing with each other to find retail companies to buy. Thankfully, and they were bidding against each other to buy a bunch of retail-oriented companies, and we happened to be one of the ones they targeted, and so we ended up getting a very good price for the company.
Yeah, that's really fascinating. That I never thought about the Army in that in that manner before.
Nobody thinks that the Army and the Navy are big retailers, but they're huge retailers. They have very sophisticated management. Like they're not mom and pop type managers. They're very sophisticated in what they do.
Well, you guys clearly created an excellent piece of software, if they even wanted it.
Right.
So, that's, congratulations to you guys, even though you sold it off. So it was a successful venture for you.
It was.
Despite the turbulence of the tech bubble.
Yeah, the tech bubble, almost killed us. Like when we did an acquisition I think it was circa 1999 in that range, and because capital was so available, I think we did that acquisition probably less disciplined than we would have otherwise, and that acquisition didn't turn out well, and it almost took us down as a business. So we had to restructure around that acquisition in a sense, and then we had to raise additional capital, which diluted the equity that the founders had. But nonetheless, we managed to get back to, we had a valuation of the company going into the tech bubble that was probably a little bit lower than when we actually exited at. And the only reason we exited at a higher value was because of that competition between SAP and Oracle.
Competition's always great, isn't it?
It's the best. It's the one transaction that I've been involved in where we had absolute leverage. Like they were trying to acquire it before. SAP was determined to beat Oracle at something because they had lost a few races to acquire companies. So when we did the agreement review, they had 32 points or something. We said no to every single one of them, and they were like, "What the hell? What kind of these guys? Who do they think they are?" And then they said we're putting pens down, and we said, "Okay, put pens down. We're gonna just walk across the street and sell it to Oracle."
Yeah.
And they came back the next day and said, "Okay, we're okay." We're okay with all that stuff. That's the only time I've ever had that kind of leverage in a transaction.
Well, sometimes people's egos get the best of them, and they really, especially when they're in that type of competition, it becomes personal from my perspective, where they just really want to get in there and say, I'm not losing this one, to the point that sometimes rationality gets put at the door. Because if they had 32 points that they wanted, and you guys said no to all of them, and then they still came back, I gotta wonder what's going on there.
Well, it was for them. This was a pimple. Like it wasn't going to hurt them, one way or the other. In fact, later on, when my partner went to work for SAP for a period of time, he said, "Well, we would have gone, X million more on the transaction." So we left money on the table, but. I do take your point. Like when you're in a acquisition-driven environment, CGI is an acquisition-oriented company as well, and a great company. So there's ways to do acquisitions that work, and there's ways to do acquisitions that sometimes you're reaching too far, and it ends up blowing up in your face. If I had to pick, having built businesses that were acquisition-driven and other ones that are growth-driven. Like internal growth driven, I'd say the internal growth way to create value is a lot easier. But if you can get on a roll with acquisitions and you have access to capital and you have good deal guys, disciplined deal principles, then you can also do very, very well.
I imagine so. And I was going to ask you actually about organic growth versus acquisition, because you've been a part of all these different firms that you were either a managing partner or a founder.
Yeah.
So I suppose part of it depends on industry when you think about organic growth versus just acquiring it. But from your perspective, I suppose, what has worked the best for you in your experiences?
I would say, net organic growth works better for me. It has worked better in terms of creating value. I mean, in the Triversity case, it was virtually all organic growth until we did that acquisition at the end that almost killed us, and then we recovered through organic growth. And in the case of First Asset, it was mostly acquisition driven, and it was very difficult. Like I used to call it a 6-ring circus. Like, it was very, very difficult to manage that process, and very few people, in my mind, especially in the asset management business, know really how to acquire and integrate businesses that have human capital at the center of them. If you have a product that you can integrate, like a widget, let's say mutual funds that are like widgets in a sense. CI Mutual Funds was extremely successful. Buying and acquiring and integrating. The acquisitions they did, and it created tremendous value doing that. What we did at First Asset was way more complicated. We were trying to keep the teams, the human capital teams that we were buying, and keep them happy. And that's like a 6-ring circus, because everybody's got their own deal, their own perspective on themselves. And so it becomes tough to keep those guys working in the right direction all the time. So it's very, very difficult. So with my latest thing with Evolve, it's been almost entirely organic growth. We did a small acquisition at the very beginning, and I think it's worked really well. When we do look at acquisitions today, but we look at them in a very disciplined way. And if we can't see that it's going to add value and it's going to be integratable immediately, we tend to shy away from any of those ideas.
Right. Well, you brought up First Management, so let's talk a bit about
First Asset Management.
My apologies. First Asset Management, or AMG, as
it turned into AMG.
Yeah. So let's speak a bit about that. That was what you started after Triversity was sold.
No, it was actually sort of overlapping.
Oh, it was, okay.
So I used to say, Triversity was my night job and First Asset was my day job. I was the CEO of a First Asset, and co-founder and CEO. So it was like 24/7 work. And Triversity by that time had grown into a decent sized company. It was run by my friend Dave Thomas, who was the CEO. And I was essentially providing mentorship, executive chairman type stuff in the background. A little bit more interactive than the average executive chairman, but it was like a night job. So, but I liked it because it gave me a variety of things to think about and to understand. And obviously, the interplay between the companies and some of the things that they were going through from an acquisition perspective, informed the other experience. I think in the First Asset case, that was much more of where I was not so much an entrepreneur, but a hired CEO. And it was, managing a bunch of stakeholders and managing a bunch of affiliates and managing the team that was also doing the acquisitions and managing those affiliates. So it was a challenging thing to do. Probably the most challenging thing I've done.
Right. And can you speak a bit about some of the work that you did? Because it sounded really interesting. You helped with firms raise capital. You helped with reconstructuring or restructuring.
Yeah.
Oh my goodness, I can't speak today.
Yeah.
Restructuring. So what was that like? And especially this was probably in the earlier 2000s. During that era, when we had kind of emerged from the tech bubble and everything that came along with that?
Well, I mean, in the 2001 era was a high active, high stress period because both the tech business that I was the chairman of at Triversity and then First Asset went through dramatic upheaval. I mean, if you recall, in the tech market, probably don't recall, you're too young. But in the tech bust, the Nasdaq dropped more than 50% during that period of time, and the Dow also dropped significantly. And so I had a business based on assets under management, and our revenue was based on assets under management, and they went through a big downdraft, and we had as an acquisition company we had leverage. So it's not a good thing when your income is going down and your leverage is the same. So we had to deleverage. We did some stuff to deleverage and survive. And then eventually we sold that business too. And it happened that we sold First Asset and Triversity in the same year. We sold both in 2005. So I used to joke that I went from having 2 jobs and no cash to having more cash and no job. Because then I wasn't doing the day job or the night job.
Yeah.
And actually that summer of 2005 was one of my fondest memories because it gave me time. My son was 10 at the time and he was playing baseball. So I started coaching baseball. We went on a few baseball trips and it was a wonderful, wonderful period of time for me to take, to chill a bit for a little while. So I kind of chilled for about 2 or 3 years and then started a new business again later.
Yeah. Well, I mean, I'm sure you deserved it, having had a day job and a night job for years and going through some very volatile times, I'll say, with everything that happened in the late 90s and early 2000s.
Yeah.
But like, Michael, what drives you? I'm very curious because you're a serial entrepreneur. You kind of go from one firm to another. You're usually start founding these firms or you're helping manage them. Like, what compels you to do that? What do you find so fascinating about it?
Yeah, I mean that's like a existential question, to some extent. I think it's at the core of it. I like to solve problems. Like I'm a problem solver. I'm not a marketing guy. So I'm a good sort of complement to the marketing guys. And most of the partners I've had through those businesses, and I've always partnered with people. I've never done a business on my own without anybody, aside from some of the consulting that I did in between things that I was doing. But most of the time I'm partnering with somebody with complementary skills. Like Raj Lala, who runs Evolve, is a consummate marketing guy. He's one of the best marketing guys I've seen in the business. And, he and I work well together because we complement each other's skill sets and our styles. So, in the end, I think you have to find the right team and then tackle something. And there's great sense of accomplishment when it works. And some of it's got to do with, proving people wrong because most people predict your failure at the beginning of a business. Just about everybody is betting against you that, isn't your friend or isn't, maybe even some of your friends are betting against you. You don't know it. But, the facts are that, people have, we have a bit of a, eat your own mentality in Canada. So, it's partly that. It's partly succeeding even though, people think you're not going to. And then also, just solving the problems and building teams and having achieved something. It feels great when you achieve something with a team that you like and that you interact with and that you fit well with. And it's the best kind of feeling to have, if you will.
I mean, that sounds amazing. It almost seems like just finding a group that you get along with, who complement you, you complement their skill set, and embarking on a fun adventure at the end of it. In some ways,
stressful but fun adventure. I mean, obviously the outcomes drive the amount of fun you have. You know, if the outcome's really good and positive, it's a lot of fun. If the outcome isn't as good, then it's not as much fun. But most of the things I've done have we've found really positive exits for the businesses that we started, and I've had great relationships with the people I've built businesses with. You know. For the most part.
It's funny as you were saying that, because, and some people think I'm crazy for feeling this way. Some people think it's great that I feel this way, but I believe discomfort is not a bad thing. And I've said this many times before, where I feel it helps you grow. You really learn who you are. You sort of come to yourself in some ways. Where if you're just always, just stagnant and you're happy, I don't think there's much room for you to grow in that kind of area. So that's one of the reasons why I like different challenges. I like variety of work, because sometimes I don't know everything, obviously. Most of the times I don't know, actually. But I always think it's fun to kind of solve that puzzle and to learn something new. And there's a sense of accomplishment to it as well.
Yeah, I think, you have to have a complement. If everybody sees the world the same and you see things the same and you experience the things the same, you're not going to have success, because, you're not going to capture more of the opportunities, teams that work well together usually have complementary skill sets, so that they see a broader landscape, and they understand the opportunity set and the solution set more thoroughly than if they were, with a bunch of people thinking the same thing. This is one of the things I think that is dangerous for people, when they get really successful, is they tend to surround themselves with people that don't say no. Mm. They, as they get more successful and they start thinking they're all that, they start being less responsive to counter views. It's like, you've seen the movies, and you can speculate who I might be referring to, but, where people get, bigger than their britches, and then they stop listening to people around them. And that, I think, ultimately leads to their demise, and it may take a long time, because they may have had great success, but people who surround themselves with sycophants and people that think the same definitely aren't growing. And they're definitely not, solving as many problems as they could.
And I would imagine that also wouldn't be a very fulfilling lifestyle, to just be surrounded by yes men, to not have any personal growth.
It depends. I guess it depends on the personality. Some people are very narcissistic and really want that environment, and if they've got a lot of money, they can enjoy being on their boats and flying around the world. Some of them sort of anesthetize themselves away from thinking, I'm the greatest there is, and then I just stop listening to people, and they don't think that it's necessarily a bad thing for them. From their perspective, from their seat, it doesn't look that bad. So it takes some inner skill, emotional IQ to really understand who you are, to really, to understand what might be going on that make you not as effective as you could be.
That's very true. And I want to go back slightly to when we were speaking about teams. Something very big that happened during the pandemic was just the challenges around fostering talent, especially the up-and-coming talent. Mm-hmm. Mostly because prior to the pandemic, you were in the office, you saw people, you saw your teammates, you were able to see the folks around you, and you were just more in touch with who was there. But with the pandemic, we became a bit socially isolated, and we lost that touch point. So in your experiences, how have you ensured that you were fostering the next gen? What kind of approaches did you take, and what did you find helpful?
Well, I mean, I my comments on this would be sort of, personal to the situation we found ourselves at Evolve, and then my general observations about what's happening in the broader context. But at Evolve, it brought the team closer, like because we were a small team at the time. We're still a pretty small team, and so and we were under duress. Like the markets were down, assets were down, revenues were down. We had to really batten down the hatches, and we had to really look at our business and figure out what was the absolute most important parts of it. And it really drew us closer together as a team. I think that experience really is at the core of some of our cohesion as a team. The team at Evolve has evolved into a really really great team with Raj and Elliot Johnson and Keith Crone, who are my partners in that business. They've hired a good group around them, and they can do a lot of different things with a small amount of resources. As to the general comment that you made about isolation, in larger companies, and we see it, we interact with all the large banks and large dealers, etc. So we have some perspective on it. I think it's really hurting the emerging young people in those organizations. It's really hurt those people, the people in their, let's say in their late 20s, early 30s, who are vying for managerial positions or promotions within their companies. I think it's exceedingly difficult to promote somebody that you don't have a relationship with, and it's exceedingly difficult to build a relationship online, where you're not running into each other at the coffee shop or at the water cooler, as they say, or just in the hallway. I mean, in Evolve, we were making decisions. We'd get in the hallway and talk about something and make a decision. You can't do that online. You can't have the sidebar discussions. A lot of the joke telling and the sarcasm and stuff that goes on, when you're in an office that has a way of bringing you, closer together because you're having fun. You can't do that online.
Yeah.
But in addition, if you're trying to figure out who you're going to promote, if they're not showing up to the office and all you do is see them on Zoom or are you talking to them on the phone or whatever, I think it's really damaging to those young people. The older managers who have achieved some degree of promotion and success within the organization, it hasn't really affected them. They can stay at home and they can, work, in whatever format they want. And, it doesn't really impact them in their ability to execute their jobs. But, I've had conversations with those mid-level people in large companies. And I say, how do you figure out who you're going to promote? And invariably they say, yeah, it's the guy who shows up in the office that I get to talk to. And, so yeah. I think we have a challenge going forward for that group in terms of how they're going to be promoted and, how that process is going to work, especially if you're still insisting on, a hybrid work model or you've gotten used to being at home. I think people are making the decision that, those things that they're doing being at home are more valuable than going to the office every day. But I don't think they're factoring in the costs of, their future promotability. I think that's not, apparent to a lot of these younger people. So, if you're a young person trying to get promoted, go to the office.
That's good advice.
Yeah.
Yeah. And to your point about, having little jokes and stuff, like I'd say there's a lot of camaraderie that gets lost when it's just online,
sure.
Right?
For sure. At Evolve, we're constantly, kind of jabbing at each other and saying, making little jokes and sarcastic remarks or faking people out just to get a laugh out of them. It's like part of the learning experience, part of the bonding that you do.
Absolutely. Well, since you brought up Evolve, let's speak about Evolve.
Sure.
For those that are not familiar, Evolve is an ETF firm, but
Right.
Please tell us more about it.
Well, we started it in 2017. So we've been just under 6 years in business. We're at $6.5 billion in under management, which is pretty good growth. Probably one of the faster growing businesses in that space. It's
amazing growth.
Thanks. It is. The team's done a fantastic job. We have 26 funds spanning across a number of different product areas. I guess we've kind of carved out some niche in the notion of being a thematic provider, innovative products. We brought out a lot of firsts in the marketplace. We had the first cybersecurity fund. We had the first fund dedicated to the automation of the car. We had some other firsts that didn't work out, like the gender diversity fund. And so, it's disappointing that didn't work out, to be honest. And so we've just, we keep innovating, keep bringing out products. And we just brought sort of the latest innovation is this QQT, 3 Qs and a T.
Yes.
We call it QT as a short form. And that's the NASDAQ index with just the tech names in the NASDAQ index, because people think the NASDAQ 100 is automatically all tech. It's actually the only 37 companies in the NASDAQ are true tech companies. So we thought, if people really want to get tech exposure, they should buy the NASDAQ Tech Index. So we brought that out with NASDAQ. We had our name on the board in New York City. It's like kind of a milestone. And we just keep innovating. And I think the products have been obviously accepted, and a lot of people like them. And we're able to bring out products that are thematic and hit a need that people are looking for to put in their portfolios.
Right. Again, you guys have done a remarkable job, especially with the AUM accumulation, especially because ETFs, there's so many, it's a bit of a saturated market when you think about it, because you can pretty much find an ETF for just about anything that you're looking for nowadays. I do want to touch a bit on, you mentioned some of the funds that did not do well, particularly the gender one, because I feel that a lot of the times these types of funds get introduced and people get the wrong perception of them. And so they don't always tend to do well, where, you're not focused on performance now, you're focused on gender issues. And a lot of the times focusing on gender issues will actually help drive performance. And I feel that message gets lost.
Yeah, that was a disappointing fund. But I always say, if you're not failing, you're not innovating. You got to fail in order to innovate. So some of the products that we come out with just fail for reasons that have nothing to do with the product. It has everything to do with the dynamics in the marketplace at the time. On the gender diversity fund, we ended up being one of 2 or 3 that got issued. I think RBC issued a product soon after us, et cetera. But we got very little traction, even though there was a lot of interest in the product. There wasn't a buy-in. There wasn't a true buy-in from investors. And, it has as much to do with the structure of how investments are made, who's making those decisions. There aren't a lot of women actually pulling the trigger on decision-making in large pension funds, et cetera. At that time, there certainly wasn't. I think it's probably improved a little bit since. And I think people, talk the talk, but didn't walk the walk on it. I think there was just, and it's very disappointing because we had probably the underlying infrastructure of that fund was the best in the marketplace. We had a firm out of the Netherlands called Equileap, which has a world reputation for developing data around the impact of gender diversity on companies and the performance of companies. And they have their own index now, and it has outperformed the index probably by a couple of percentage points, based on companies that have better gender policies in their human resources function. But it just didn't get any buyers. It used to be a fund I talked to somebody about it, and they say, "Yeah, that sounds like a great fund. Oh, do you want to buy some?" No, but I think you should go talk to It's always that. Like, oh yeah, it's great, fantastic. But you should really go see these people. Oh, how about you? No, that's not really doesn't really fit my my portfolio. So it was a hard sell. Yeah. So we went at it for two and a bit years and didn't get very far, and then sadly decided to close it down.
That's unfortunate. And in my last episode, I had two great professors from Metropolitan University.
Yeah.
And they're in the engineering world, computer science, all that good stuff. And I learned that, I know that there's an issue when it comes to gender bias, of course. Everyone's aware of that. But I thought we had made a lot of strides. And it was disheartening to hear that even when you search things up, the quality that you get for when you search up for female things versus male things is much lower. And I think it goes back to your point about there's a lot of talk, but not a lot of, firms, people doing walking the walk, if you
well,
I mean,
it's an unfair generalization because some firms are doing better than others. And, the gender scores that Equileap did for Canadian markets showed that most of the big banks were doing a pretty good job of putting in place gender policies that were, recognizing the contribution. But, a lot of it is, too much of it is gender washing or whatever you want to call it. So you don't put women in true positions of power. You put them in service positions. So if you look at large banks, a lot of the women that are senior in banks are in service positions. Chief administrative officer, chief legal officer, head of HR, that kind of thing. There's been a few that have become line positions, running the bank or running the investment bank. But so to date in the big banks, nobody's been promoted to CEO. And, the excuse you hear is, well, there isn't anybody that's qualified or there's not enough people that are qualified. That's not correct. There's lots of women that are qualified to run a big bank. So the people who are making that decision are pretty homogeneous looking, They look like me, white, old. They've been on the board for a long time. It's hard. It's hard for change to occur unless those people are really embracing it. And I think there's been definitely resistance on that front. But it's not fair to say that the banks haven't done a great job promoting women in their organizations, because they have.
Oh, no, I believe the banks have. I meant in general, in different industries across the globe, or particularly in Europe. I think Europe's actually much ahead of us, but in North America, there's always a lot of talk across industries about wanting to promote women. But then we see statistics like this, and it's kind of like, okay, what's going on, right? There must be something wrong. Perhaps there's some systematic issues, as you pointed out, that need to be figured out. But I think within actually the IT and the financial world, we've done a great job in promoting women, and especially with some of the board hires, there's a lot more women and different representations, females of color, which I think is great.
The tech industry is not doesn't have a great reputation for promoting senior executives in the tech world as a whole. There's obviously companies that have done better at that. I think CGI's also gets good marks on gender.
We're very focused on diversity and inclusion.
There's the firm that Equileap does an annual, review of companies they were doing it in Canada. I think, they ranked firms, and I think CGI was probably one of the higher ranking software and tech firms in that ranking. And, Europe is far ahead of us in terms of gender, but we'll get there. I think it's just going to take time.
Definitely. Now, before we went on the gender side of it, we were speaking about Evolve and some of the great work that you guys have done there. And again, we were speaking about the growth. So the fact that you achieved kind of a milestone in AUM in such a relatively short period of time. Yeah. How did you guys achieve that? Like, what was the strategy? What did you say? We're going to go in the market and we want to take it by storm, but how did you actually implement that plan?
I have to hand it to the team, Raj and Elliot and Keith, because they're the ones that really, gauge the market and bring the product ideas. Like, I'm not the guy calling and saying, hey, I have a product idea. Like they call me and say, hey, what do you think of this product? I think that, when Raj came to me initially, and we had been partners in a firm just prior that we had exited successfully, and he'd gone to work for a couple of ETF firms, and then left and wanted to start his own ETF platform. And he came to me and said, "Hey, do you want to get involved in this ETF thing that I'm thinking of doing?" And I was like, "No." Like, how many ETFs can there be? Like, that was my first sort of reaction. And then he said, "Well, let me tell you what I want to do." And his description was like, I'm gonna run for the open space, which was to be in the spots where the big ETF providers weren't, which is, in the thematic spaces and in some of the innovative spaces that we eventually brought a bunch of products out. So I think that was the key, is getting into the space that the big players weren't going to. So, nobody needed another S&P 500 index. Nobody needed another TSX 60 index. So, you're going into spaces where people would have an investment need, that think that investment proposition is a good one, and you're filling that need with a thematic product or an innovative product in that area. And in summary, I think the guys have done a good job. Their batting average has been great, bringing up products that people find attractive. And it's been different products at different times. We've had periods of time with growth where, we had a preferred share fund that was attracting a bunch of assets, and then that went out of flavor. And then we had the cybersecurity fund that, was attracting a lot of assets and still does. And then, lately it's been healthcare. Our global healthcare fund is growing rapidly, and it's one of the bigger funds that we have. We have yield products. All of our covered call products have great yield on them, so people are attracted to the yield. We have the HISA products, the high interest savings accounts products, that have yields that are great for the liquidity of that product and the safety of that product.
Yeah, well, especially now with rates going up, I imagine more people are flocking to those HISAs.
Well, it's been one of the the flows to those products across the board. We're one of 5 issuers, 4 major issuers. And the flows into those products have been very strong over the last 15 or 18 months. It's product yields currently 5.48%. Like, it's completely liquid, and it's just bank deposits. So you can't get a more safe. And these are big banks. They're not little banks. So they're essentially guaranteed by the government of Canada, although it doesn't have CDIC insurance or covered through insurance programs, but they're exceedingly safe, and they're extremely liquid, and they're yielding 5.48%. Like, that's a pretty good deal. I mean,
it's crazy when I think about these numbers, because 5 years ago, when I was in the industry and looking for bonds for reinvestments, 3 years, you were lucky if you got 3.5, and now a HISA is yielding over 5%, which is
Well, the interest rates have gone up to fight inflation, and they'll probably continue going up a little bit for a while, and then they'll probably stay there for a bit, and then they'll start coming down, I believe, the next year or sometime. But these products will still be very attractive on a relative risk basis. So I think they're an innovation that's seems like a simple innovation, but it's actually a lot more work to get those products constructed and to market. You have to coordinate with banks. You have to coordinate with different banks, and they all have different needs, etc. So it's not a simple product, but it is simple from the investor's perspective.
So let's speak a bit about that. When you launch something like an ETF, obviously there's the exchange, there's the banks, there's the end consumers. Like, what does it take to actually launch one of these things? If for anyone that out there who might want to launch an ETF, like, I imagine there's a lot of hurdles involved.
Yeah, there are. I mean, but one of the reasons why ETFs have done so well as a category, like as a relative category is because they are really accessible, and they transact easily. So when you launch an ETF, you can get it anywhere. As long as you have a brokerage account, you can buy an ETF that's been launched, and you can trade it. And you can trade it daily. So it's very easy to own and very easy to transact. More, the mutual funds are also easy, but there's a little bit more cumbersome nature involved in mutual funds, and they're a little more expensive. So ETFs are cheaper, faster, easier. So I think that's why we're seeing ETFs capture market share. In terms of what it takes to issue a product, well, you got to start with an idea. The idea is probably the key. And it sounds simple, but it's obviously not, because we're mulling over, the team is mulling over 20, 30 different ideas on an ongoing basis, and they're gauging interest, they're talking to people, talking to advisors, talking to investors, and trying to gauge the interest and read the tea leaves as to what should be brought. Some of it is more less shooting for the stars kind of thing, but it's more down the middle, looking for an answer to something that we know is an issue, like the QQT product is really, people want tech exposure, but I don't think a lot of people know that the NASDAQ 100 is 63 stocks that aren't tech. So if you want tech exposure, you need a more pure version of that. So that idea, for example, that took, 6 months to develop. Talked to NASDAQ. The guys started talking to their advisor relationships to see if there was an interest level in that, and we eventually brought it to market recently.
Wow, that I'm sure it's given, as we spoke before, it's a pretty saturated market. So trying to always, sort of, I suppose, in some ways, finding a needle in a haystack of that one thing that hasn't been done can definitely be difficult. Yeah,
I don't think we look at it that way. We don't look at it as we're going to do the only product. Like, this is the only thing, in other words, there's lots of tech products, right?
Right.
But this is a particular version of a tech product that we think has appeal. So it doesn't have to be that precise as you're saying, like you have to, find a needle in a haystack. You have to find a good product that meets a need and is well structured and well put together. And I think that usually, if you get those things right, and then it happens to be, something that people really want at the time, like that your timing is right, then you're hitting the ball out of the park. But you can hit doubles and singles, and not always hit home runs, and still do quite well.
So I suppose that's where the question about improving versus creating something new comes in, right? So you can, for instance, have an ETF out there. Let's talk about, you mentioned your health ETF,
Mm-hmm.
Life.
Yeah.
Yes. So Life is great, especially if you look at, given our demographics, healthcare is obviously a big concern. But I'm sure that there's other healthcare ETFs out there as well.
Yeah.
So how do you, let's start with Evolve's Life ETF. Like, what differentiates it to someone else's?
Well, I mean, we have that's an indexed ETF, but we have an active management component, which writes covered calls on up to a third of the portfolio. So that creates a yield stream from the product. So you're not just relying on the capital appreciation of the product. So it has a pretty strong yield. I can't remember exactly where it's at right now, but it's probably in the high single digit yield. And I think people are attracted to the yield and attracted to the potential for future appreciation in the capital. So that's a good product. That's not it's not a rocket science product, but it's a good product that hits the trends in the marketplace and then achieves some of the objectives that investors have for yield and growth. And so, it's growing quite nicely. People are buying a lot of that.
Right. And I know you guys dub Evolve as innovative and differentiated and thematic.
Right.
So I guess my question would be like, what makes it different?
What makes Evolve different?
Yes. So if you were
makes
to
us
say
want to be innovative and thematic?
Yeah, if you're
survival, like if we weren't innovative and thematic and focused on the areas that people aren't in, then we wouldn't be doing as well. So like it's kind of, some of it's like an instinct that is like we can't compete with big platforms in the things they're strong at. We have to go and compete with things that we're strong at that they have trouble getting to because they're not as nimble as we are. So when you get a product approved in a big ETF platform, it takes a lot longer. It usually takes them a few months, and their product development process, it could be a more extended version of what we do. We could decide to launch a product in an afternoon if we wanted to. I mean, obviously that's an oversimplification. You have to do the homework in order to understand what the elements of the product are. But the team has gotten exceedingly well at that part of it, at getting products to market efficiently and developing the right ideas.
Your agility is what helps differentiate you and help you get out to the market very quickly versus, I'm not going to name any names, but like other behemoths out there, it may take them longer just because there's a lot more processing on their end, perhaps.
Well, yeah, and they're more structured, right? They by definition they're bigger. They have to have more structure. Mm-hmm. So their processes for getting things to market are longer and more complicated. So I think that's one of our advantages. I think it's more than just agility, though. You have to have the knowledge base and the insightfulness to understand what might be appealing to a lot of investors and advisors, and you have to have the market data. You have to have the market intelligence. You have to be talking to investors and advisors and understand what their needs are, and that out of those discussions you formulate. Hey, I get a lot of advisors saying, wouldn't it be nice to get a pure tech product? So that's how it kind of goes back and forth in the marketplace with our team.
So it seems like market research is a very big component.
Yeah, I don't think we do market research like like a big firm does market research. But yeah, it is market research. It is getting out and understanding the landscape, understanding what products are out there, what products are appealing to investors and advisors, and then figuring out where there's a gap and a need and trying to fill it.
Right. I was going to ask, like, do you guys have some fun ways that you do market research? Like, you go and set up a little booth somewhere and try to observe and see what people want?
Yeah, we go to Key and drink and talk to people around us. That's what we do. Yeah, I mean, there's different ways to get to the ideas. I mean, Raj has, a tremendous network of advisors. I think he's probably the best at understanding the marketplace and what advisors are looking for. So we rely a lot on his instincts. Mm-hmm. and what he hears and what he understands. And obviously we do homework, we have a team of people that does analysis and looks at the stuff. But at the end, it's like a gut call. Like a lot of this stuff is just a call. Like, yeah, I think it'll do well. Let's try it. And as I said, if you're not failing, you're not innovating. So we're not 100. We're not 100. We're not batting 100, but we're batting enough. We're batting well enough that we're doing well.
Well, you guys are doing very well, so I would say your batting average is probably in that high percentile.
Yeah.
But that's really interesting. Where I suppose because of the variety of or the diversity that you have in your team, you have people with different backgrounds, different experiences. Everyone comes together, kind of has a brainstorming session, and then with the experience that I'm sure that you have, and I'm sure a lot of your teammates have, it's again honed those gut feelings or instincts where you've seen things, you've experienced them, and they help.
Well, I have a lot of faith in the team. Like, and when they when they come up with a product idea, if they're unsure about their gut on it, or if they think it's complicated, or there's some other complication, they'll come to me and ask me about it. But usually they're coming to me and saying, "Hey, this is a product we're bringing to market." It's not. I'm not involved in the market research per se, but they will ask me for my input at various points if the product's more complicated. Like on the QQT product, it was really their idea. They work with NASDAQ. I think I met NASDAQ when we were in Miami together. I mean, it wasn't like I wasn't involved in, "Hey, this is a great idea." But, when they brought it to me and told me about it, I thought, this is a pretty good idea. And, I think it is a great idea.
Well, I would say so. Because as you mentioned before, most people think NASDAQ and they think tech.
Yeah.
So to learn that there's just a bunch of biomedical stocks in there.
There's a lot of different stuff in there.
A lot of interesting stocks in the NASDAQ. I will say that.
Yeah.
Now, if we sort of shift gears slightly, I did want to speak about Bay Street Hoops.
Oh, okay.
And because you and I met through that organization.
That's right, yeah.
And of course...
Thank you for your volunteering.
Of course, I was happy to do it.
Yeah.
And one of the beneficiaries for Bay Street Hoops is Drive for Dreams. So I'd like to hear a bit about Drive for Dreams and your work there.
Yeah. Well, it's a labor of love in a sense. There's very few things that get me sort of energized than to talk about helping kids, helping at-risk youth to get scholarships. That's what the focus of Drive for Dreams is, to try to help kids from at-risk neighborhoods use their basketball skills to get a scholarship to a U.S. or Canadian university. I think when I look at the success of Drive for Dreams, that's how I measure the success. How many kids have we helped? And so over the years, I think we probably put 90 or 100 kids into scholarships in various programs. Probably half of those are like NCAA Division I programs that people were good enough to get the scholarships to. So Drive for Dreams started, I think, 2014, but I'd really been doing the things that Drive for Dreams does, for a couple of years before that. And it was really a function of my son being interested in basketball. He played basketball. He wasn't a Division I player, but he played at Western, at the University of Western eventually. But as he was playing in high school, he was playing at a higher and higher level, and he got, to interact with teams. And then we ended up traveling with some of these teams, and he was good enough to make one or more of these teams. But I could see that they were, resource strapped, and mostly, kids from, single parented families, difficult economic circumstances. Not everybody, but a big chunk of them. And so I started financially helping the team that he was playing for. And, I used to say, if I give money to United Way, I'd rather give it to a team like this, where I see the impact on the kids that were on the team. And so we started helping out with the travel costs, et cetera, to get these kids to, tournaments in the U.S. to be seen by coaches. And it went from there to forming a foundation in 2014. And then soon thereafter, I was introduced to the Bay Street Hoops people through CIBC contact. And CIBC had been a sponsor of Drive for Dreams from the very beginning. And we were, it was a wonderful partnership between us and Bay Street Hoops, where we now are one of the beneficiaries of that tournament, which has been going on, as you know, I think that we're coming up now to the 30th year next year. And we raise money. I think we've gotten to about the 3 million mark over the number of years. Obviously, we've only been I've only been associated with it over the last 8 or 9 years. And it's been a great experience. Not just because I get money to help those kids. We actually end up, using the money that we raise from that tournament. And then I use my contacts on Bay Street to get sponsors to come and participate in that. And, but the whole process of doing that is, as you know, is a great thing to do, because you're dealing with a team of volunteers and a committee that meets and works hard to get that tournament executed, and it's done a great job, and the people associated with it have done a great job. Tej Mohabir, who's the chairman of Bay Street Hoops, does a fantastic job, leading the committee, and it's been a great experience.
Yeah, well, it was my first year volunteering, and it was an amazing experience. And I was really happy to see all the kids that came out that have been helped by Drive for Dreams and Kids Sports, which is the other beneficiary. Right. So it's at that point, to your point, it's not an abstract anymore of, okay, I'm just giving my money away. I'm just going to go help someone. You see the people that it's helping and the impact that it's having. And I found it to be very powerful. Yeah,
it's a great thing. When you help a kid, and we meaning my immediate family has been, part of it, because, a lot of times some of these kids are from out of town. They have no place to stay for a night or two. They stay in our basement. My wife has been exceedingly understanding. We don't do that as much anymore, but we used to do it a lot at the beginning of it. And it's great for my kids. It's great for the kids to see, to be involved in a process where you're helping out other kids from less fortunate circumstances. This year's tournament, we had 53 teams, from all corners of Bay Street, a lot of banks and accounting firms and other firms participated, entered teams. The best part of that is that the people that come to the tournament and play in it have a great time. They love playing. We have the competitive division, which is quite serious basketball. They're usually, former high-level players from university. And we field the team as an Evolve team, but it's not really our player. It's really the coaches and the former players of the program that we sponsor. We've won the championship the last 2 years in a row, but none of those people work for us.
Well, I don't know how Tej is going to feel when he learns about this.
He knows it. But, at the competitive level, they are extremely competitive. And then below, we have a number of divisions, as you know, and you go down to the lowest division, and they're having fun. They're having a great time. And, we have the party at the end of it on a Saturday night, and there's an auction and all that stuff. And it's really a lot of fun. And they get to see some of the kids that are helped by the program. We had the shoe for the car contest again this year, which was also always exciting. So it's great. It's great fun.
Yeah, the shoot for the car. Yeah. Those are always heart-thumping moments when you think this person almost got it. Are they going to win that car?
Yeah. And unfortunately,
it hits the rim.
I don't think anybody's come close yet.
Well, if we look at where you have to stand to throw that ball from.
Yeah, it's from half court.
Right, it's half court. So,
well, Steph Curry could probably make that shot without a problem.
You know what? Next year, we'll have to get Steph down here to make that shot. I think that would be great. But the reason I wanted to bring this up is because I think the way you speak about it and your own perspective, like earlier on you shared that, you don't want to be surrounded by people that are saying yes to you. You don't want to be surrounded by just constant success. And I think being involved in programs like this actually helps people better themselves. It helps them help out with their communities, of course. Yeah. And also just learn. I always find these experiences to be really good learning experiences because you learn about yourself and about the world around you, which can be very impactful.
I think that's right. I think also volunteer structures, organizations like that, where you have a bunch of work to do, and then there's a bunch of volunteers. There isn't, you can't direct people like you would although that would be my inclination. Tej he's always like, okay, Mike, just let me take this. But he manages to get the most out of people, and it's an interesting thing. If you want to volunteer for that, it's an interesting opportunity to sort of to challenge yourself, because you go into an unstructured environment with a bunch of things to do, and nobody's telling you to do them. Like nobody's, so you have to volunteer to do them, and then you have to do them. And so some people, sort of hide in the corner a little bit, and some people really take to doing it. Like they become the stalwarts of the committee. And it's an interesting thing. It's an interesting sort of test, psychological test. Like if you're looking to move up in an organization, volunteer for one of those organizations, because that's where you get to test your mettle as to how much of a self-starter are you? How can you deal with, information that you don't know all the information? You have to figure it out. You have to ask questions. You have to, it's kind of the same skill set that you need to succeed in a business setting.
Yeah, and as we discussed before with the lockdowns and social isolation, it's a great way to get out there,
for sure.
Meet people, network. I mean, I got to meet you and a bunch of other wonderful individuals as well, which has been a great experience for me. And it also felt good to do something to give back, right? Because I feel oftentimes, especially when we have very demanding jobs and we're very focused and driven, we can sometimes forget about the world around us. And this is always a great opportunity to sort of come out of there, take a step back and realize that there's a whole other there's a whole other planet out there, and you need to pay attention to it. It can't just be about you.
People think that you give back, or you give to charity, or you give money away, near the end of your life, or once you've become successful or whatever. But like, it's not true. You should be, in the mindset of giving back all the way along in your career. It's a great thing to do. It's a wonderful learning experience, but it's also very rewarding. I've always, like from the very beginning of my career, always done something in my spare time to give back to the community. Before starting Drive for Dreams, I was involved with various charities where we, you'd have to, go to meetings and deal with, the issues for that particular charity. And I always found it to be the most rewarding stuff that I was doing. I belong to a business group. It's a YPO group. And, the guys will say, Mike, when you talk about the basketball stuff, your Drive for Dreams, like you light up, like you really, it's obvious that that's the stuff you really like to do, as opposed to, the business stuff, which is a little more, structured and more mundane, et cetera. And it's true. Like you get a lot of reward, a lot of psychic reward from devoting time and effort to helping other people.
Definitely. And I think that mentorship portion is very big, especially when you do have a child who hasn't had all the opportunities out there. And it helps you, I think, also improve yourself, but also help that person along the way.
Yeah, I'd say, the biggest thing that's helped me mature as a person is learning to be a better mentor. And, I thought, I had mentors early in my career, so I knew what the experience was like being mentored by good and bad mentors. There are good and bad mentors. And then as I've gotten down the pike, when I see my role now, say, for example, in Evolve, I'm more of a mentor, cheerleader, chairman. That's how I would classify myself as, when there's difficult problems, that's where my experience can come to bear. But I'm not going to tell the team, what they should do about their daily lives or their daily activities. And learning to be a good mentor is a skill. And it's something that comes with maturation and also benefits from perspective that you built over the years, living your life and experiencing the ups and downs of your own life.
Absolutely. And earlier on we were discussing about the younger generation, and you spoke about your concern about their ability to get promotions. And I think mentorship is something that can definitely help them. At CGI, for instance, we have a mentorship program where new grads and people that are starting out very early in their career are able to be partnered with someone who's more senior for a mentorship role. Essentially, help them figure out their work life, but also, create a relationship that's long lasting. And I feel like you have this down very well, but how would you, I suppose for people that are looking for mentors, what advice would you give them? How should they go about seeking out a mentor?
Yeah, it's not the easiest of things to do. You have to, I guess the best way to do it is to build relationships with people that have experience and can give you perspective. And so, I had mentors early on in my career that helped me. I still, harken back to lessons I learned from those mentors, some of which were good, some of which weren't so good. But you learn on both sides of the equation. And I think that if you're looking for a mentor, you want to find somebody who's got, experience to offer you and to give you some guidance. I think a lot of large companies have these mentorship programs. So, it's just a question of seeking it out, but then figuring out who in the mentor lineup is going to best fit is kind of a hit and miss thing. It's like getting like getting a shrink. Like you're going to see a few of them and then decide which one's going to be the best for you. I think that's the way it's kind of a hit and miss thing. Sometimes you can be referred to, some people who know you and maybe know that party could say, hey, I think you guys would make a good match. That's in essence how I met Raj. Like I met him, and I kind of consider myself Raj's partner, but somewhat of a mentor to him. We met because somebody we both knew said, hey, I think you guys would fit well together. You're kind of opposites in a little way. So sometimes that's what you need is a third party to put you together. And it's a bit of a trial and error process. But I highly recommend it, especially for people inside of large organizations. I think it's really hard to move up in large organizations unless you're mentored by senior people in those organizations. It's just so hard to stand out unless you have those relationships we talked about earlier.
Definitely, and it also helps with skill development as well, right?
Yeah,
Personal
for sure.
development, skill development, and my take is that it's never a bad thing to know people. So
for sure, one of the programs we just launched last year in Drive for Dreams was partnering some of the kids who end up graduating from their university program. So we deal with them at the high school level, and they go off to university and they play. Not all of them obviously end up playing pro. Some of them are just coming out of the schools, and they're trying to figure out what they're going to do. And we started a program where we tried to match up those people who are graduating with mentors inside of CIBC. CIBC offered us to match up to some of their mentor programs inside. And it worked for, probably half the parties. So it's a trial and error thing.
Yeah, but it sounds like an amazing program. And obviously not everything is going to work for everyone because we're all individuals with different needs. Yeah. So it makes sense that you're going to have some of those hit and misses. But I think it's amazing the story that you told about how you met your CEO, Raj Lalla, was through a third party who said, hey, I think you guys would hit it off. And then you went and you started up Evolve. So
well, we first started another company called,
you did?
Yeah, called Propel.
Let's hear about Propel.
So Propel was a company, it was a closed-end fund product company. When did we start that? It was probably 2008, somewhere around there. And we raised about $1 billion in different products, and then we sold it to Fiera. And then Raj went and worked for Fiera. So he was there for a few years. And then he circled back afterwards, went to work for another ETF platform. And then after that, he came around and said, I want to start my own thing. So, I'm happy he came back and asked me if I wanted to participate in it.
So hold on. Did you say you started Propel in 2008, like during the crisis?
It was just after. It was just after that period. Yeah, it's probably 2009, somewhere in that period.
So was there a lot of opportunity at that point?
Well, there was, because people were looking for ways to recover, from the disaster that was the market at the time. We brought to market a fund managed by John Paulson, who, if you remember, famously predicted the demise of the mortgage business, the real estate business in the U.S., and bet against it and made a huge amount of money. So we brought a product to market with him managing it, and it was an exceedingly difficult product to bring to market. And then, the product didn't perform that particularly well, but we used it as a impetus to launch other products, and that's how we built the business.
Wow, your life is just full of one project after another, and I'm learning that you have interesting timing, Michael, with all these different things that you've been starting up. So
sometimes it's not always interesting.
Always interesting timing. I did want to speak with you about industry trends as well, because we were speaking about Evolve and market research and how you guys bring some of these things out. So I guess we can start with, what have you been seeing in the industry as of late when it comes to the ETF market?
Well, I mean, I think ETFs are going to be the new dominant product in the marketplace, or they already are to some extent. I mean, a lot of the flows are going to ETFs because of what we talked about, because they're fast, they're easy to transact in, they're inexpensive. So I think a lot of people are putting money to work in the ETF side of things, but the mutual fund business is still a very big business. So we're taking market share away slowly but surely from the mutual fund business, and some of our funds have mutual fund versions, because we know that some channels are easier, more comfortable using the mutual fund version, but they're the exact same product. It just has a different wrapper. So I think you'll see mutual fund companies doing more of that, bringing, putting out ETF versions of their mutual funds. But some of them have cost, infrastructure for those mutual funds that doesn't really match up to an ETF environment. So that they have to bring out new products. And so, of course, the problem with large mutual funds bringing out ETFs is they're lower margin. Mm-hmm. So they cannibalize their profitability by bringing out more ETFs versus mutual funds. And, they'd like to stay with the mutual funds from a profitability perspective. But that process, that march is underway, and I think will continue. So I think in terms of trends, from a marketplace perspective, obviously yield is back in vogue. Mm-hmm. So I think we're seeing yield products attracting a lot of assets. We haven't seen like fixed income. We've got a lot of flows into like short duration fixed income. I'm not sure, people got burned with longer duration bond funds. So I think that's going to be slower to get revived, but that's also coming back because yields are finally up to, what people expect in the bond fund.
Right.
But, the bond funds right now are probably yielding as much or, comparably, as much as the HISA products. So if you don't want to take any duration risk, which one makes the most sense? So that eventually, I think, work itself out. But I think yield products and interesting thematic products, I think, are still going to be a big theme going forward in the marketplace.
Definitely. I think thematics is a really interesting one. And we were speaking earlier, and Evolve has a cars
product, yeah.
Yeah. So Can you speak a bit about that? Like, what is that focused on? Just, is it luxury cars, regular cars?
No, that's focused on the automation of the car, like the electrification and automation of the car. Both self-driving and the electrification of cars. So it's not just obviously companies like Tesla are in it, but also companies around that whole process are part of that portfolio.
Right.
That marketplace, the self-driving, has had its challenges getting off the ground, but it's going to be a massive market.
So you're a believer of self-driving cars?
I think self-driving vehicles. I'm not sure about cars. Like, I think cars will be the latest, the last in line, but trucks and transportation vehicles and things like that are definitely going to be more self-driving in the near future than they are now.
Yeah, that's actually really interesting because I drive, and sometimes when you're surrounded by a bunch of trucks and to think about looking over and there's no one in the in the vehicle, in the driver's seat, it's a bit daunting to think that we're at that point where we can just fully rely on this technology to not swerve over.
I don't think it's yet. Yeah, I don't think it's yet at the 100% reliability level, but it's going to get there. I think the technology, AI is going to accelerate it. I think it's definitely going to get there. China's way ahead of us in automated driving. So we're going to get there.
Yeah. Well, China always seems to be a bit ahead of us in a lot of different tech areas. I mean, we were speaking about CBDCs earlier, and that's speaking of thematic funds, you do have some crypto in the portfolio as well.
Yes, we do.
So let's talk about crypto. What are your thoughts on crypto, Michael?
That's a big question. What are my thoughts on crypto? Well, I think Bitcoin's here to stay. I think that's the most definitive statement I can make. I think Ether's not far behind, but close behind that. But as it relates to how the rest of the coin world and the NFT world is going to develop, I'm just not sure. I think a lot of that was, a lot of it was hype. So we've gone through a period where that's been, more or less wiped out. Like, the people aren't buying much of those things anymore. But it will revive itself. It will develop and consolidate and revive itself. But I think Bitcoin is definitely here to stay. And obviously everybody's been tracking the BlackRock coming to market with a Bitcoin ETF. We'll see if the SEC approves it. There's actually 6 issuers that have products that they've tried to get approved by the SEC, and the SEC has consistently turned them down. But BlackRock obviously has a lot of market power, and they've come up with a solution using providers, using the infrastructure behind the product is very well put together, and it's the same infrastructure that we use on our product. Our product's more or less identical, or probably a little bit better than the BlackRock ETF that's coming to market. We are very much a pioneer in that space, along with some of the other issues in Canada. And Canada was ahead of the U.S. in that space. So I think Bitcoin will benefit greatly if those products are approved. The SEC seems to be the body language seems to be that they will approve it. And we were just talking about it today. Somebody was calculating that the buying power that will come into the Bitcoin market might be as much as $50 or $60 billion worth of buying power going into the market. So you can expect Bitcoin prices to appreciate substantially if those products are approved.
Yeah, that I will say I've been very impressed with our regulators on the crypto front.
Yeah.
Because as you mentioned, we have been ahead of the US in that area, at least, which has been great. I actually listened to Rick Edelman at a conference, and he was speaking about Canadians being ahead in the crypto market, and just the ethics around allowing these types of products, right? In the sense that when you see something go 10 times in the span of, let's say, a week, and to lock a significant portion of the population out of that type of growth opportunity isn't really...
So are you talking about like a coin or something?
Yeah,
or?
like any like coin, right? Because there was a... I'm sure now people have a different perspective, but this was before some of the issues occurred in the crypto market. But you had coins that were like going 20 times overnight. It was pretty crazy, and it almost felt like you can just throw a dart in the dark and you'll land on something positive.
Yeah, I mean, I'm not a big proponent of that stuff. Like I do own some coins that I ended up owning through some investment that I have. But it's that coin is attached to a business. So I think there are coins that are attached to businesses that are actually generating revenue that are legitimate potential coins. I mean, when you say coins, they're really securities. This whole debate about are they a security, are they not a security? Of course, they're like more like a security than they are a commodity. Certainly, coins are securities, in my opinion. Bitcoin, you could argue, is a currency. Maybe it's not a purely defined security, but I think there was a lot of speculation in that coin market, and I don't think it was good for the market. I think it was it collapsed. A lot of it collapsed. I mean, FTX, its collapse was based upon its own coin. Collapsing, and they, manipulated, investor assets to hide it. I didn't think that any of that was helpful to the development of the space, of the crypto space. So, we're getting, hopefully getting that behind us, and they're going to deal with it from the Department of Justice is obviously pursuing some matters there from the U.S. And, I think that'll be put to bed, and then people will probably face a more regulated environment where we're not going to see some of those abuses that we saw. And the SEC in particular is really going after these unregulated exchanges and making their lives difficult, inside the U.S. for sure. But they still operate outside the U.S. So there's still some risks out there. I mean, I get a call every day from some guy trying to sell me a Bitcoin trading strategy that's guaranteed to make money. It's like, okay.
Well, I mean, FTX is the Wild West, and I think there was a lot of things going on there. But to your point about being all that stuff being good for the market, being bad for the market, I think every market has its trials and tribulations. And the crypto market sort of has gone through that now, and it's shed the extra fat, if you will. It's unfortunate that people lost out, but I feel that unfortunate things happen in life, and hopefully everyone's, a bit smarter about it now. And to your point about coins that are attached to something, I feel there's a lot of innovation in the space where you'll see coins coming out that are attached to something a very interesting idea, like web storage is something that I've been looking at recently because everything's going on the web, and there's some really fascinating coins that are focused on that issue. Yeah. So I do think there's a lot of innovation in that arena, and that there's a lot more to come.
Yeah, I think that it's going to be far more regulated, and so it's going to be harder for people to manipulate the marketplace like they have been. And so to me, it's buyer beware, because things can move. You can buy low and sell high in theory, but a lot of people get stuck on the opposite end of that. It's just like the meme stocks. I think that's another area where the market sort of lost track of itself. There's no real rhyme or reason for that stuff except for pure speculation and people pursuing something. I mean, that's been, shoved out of the market right now, and hopefully it comes back in a different way where people with good innovative ideas can access the market. I don't see us doing a ETF based on coins anytime in the near future.
So that idea is up for grabs.
I guess if somebody wants to try it, it's just really hard when you've got things that have that kind of price volatility and liquidity issues around it. You can't really build ETFs off illiquid, volatile assets. So who knows? Maybe 5 years from now, we'll be looking at it. But right now, I don't see it in the near future. I think, as I said, Bitcoin is going to be here to stay. So, I mean, that's the centerpiece for the crypto market. I think as long as people are, accepting of that fact, and it looks like the regulators are eventually getting around to, to chinning up to that idea, then an ecosystem will build around that. And obviously the governments all want to get in on the action before, they get threatened by Bitcoin. So, a lot of governments want to bring their own coins to market, their own currencies to market. There's a lot of discussion about that. So we'll see how that impacts everything.
Yes, the CBDCs. Another very interesting area because, and I believe the Bank of Canada is getting pretty close. They've been having a lot of consultation sessions for our CBDC. I feel like I can speak about the crypto market for hours because it's an area I'm very interested in, and there's a lot to be said.
Be careful.
I'm always very interested by innovation and people's ingenuity, and I feel like there's so much of it there. Obviously, when it comes to investing in that market, you have to do a lot of research. You have to be, as you pointed out, buyer beware. You have to realize that it's not regulated, so something may not be as it seems. But there's people that have become very savvy and that have done well. But I would advise anyone to just be very careful and do a lot of research before you do anything within that market.
Don't confuse luck with savvy.
I feel
like just because people got out at the right time and got lucky and got in and out and made a bunch of money doesn't mean that they have a high IQ. They just happen to guess right. It's just like you can go in a casino and bet on numbers and make a bunch of money, and it doesn't make you a great gambler. So just be wary. I think when things are not based on fundamentals, there's always an issue about things not being predictable or as predictable.
I agree. I think there was some luck, but I also think some people actually did get quite good at it. But we do need to wrap up. However, before we go, Michael, I want to hear about your vision for the future. What do you see happening?
In what area?
We can talk, it can be the ETF world, it can be our industry in general. Like, where do you see things going?
Well, I mean, I'm a big believer that, artificial intelligence is going to be the industrial revolution on steroids. I think AI is going to change everything that we do and every way that we do it. I think tremendous value is going to be created from it. And I think we're going to solve a lot of problems. There's definitely issues with it and risks, and I'm happy to see people, screaming from the treetops about the risks. I hope that leads to intelligent regulation. Who knows? Governments haven't had a great track record of doing that. But I believe that, innovation is good. And I think that, that area is a possible great creator of value and wealth for the marketplace. I don't think it's going to be a big job displacement thing. But if you're not, if you're not up to speed on the latest tools that are available to you in your job using AI, then you're going to be replaced by somebody who is up to speed with the latest AI tools available to your job. So I think that's definitely a warning signal. But there's going to be other jobs created. There's going to be as many jobs are going to be wiped out. All the writers are thinking they're going to get wiped out. That's not true. I think, there's going to be more demand on writers who can take basic dialogue, basic writing, and turn it into something special. So, for me, it's setting the bar higher. So yes, some of the poor writers will be out of jobs, but maybe arguably they should be out of jobs. They should move on to something else. And so I would encourage, like I tell my kids, I say, listen, AI may not put you out of a job, but you're going to have to integrate AI into what you do, and you're going to have to know the tools that are available using AI that will make you more productive and improve your ability to do your job. So I think that's the most important advice I can give young people.
Oh, no, that's great. And AI has been the topic for the past little while. And I believe it all comes back to coexistence, to your point. It's not going to completely displace us, but like I mentioned in our last episode, we were speaking about AI, and we spoke about using AI as a tool to aid us, right?
Mm-hmm.
Especially because there are gaps in our society that AI can help with,
right.
Healthcare being one of those areas.
For sure.
Let's use it to our advantage and give everyone the best experience at life that we can.
Yeah, I think that's right. I think it will be a net positive. I think people who think it's going to be a disaster are not thinking about it quite correctly. And so I think that you got to stop fearing it and embrace it and use it for your benefit.
I think that there are people on different sides of that debate, and that is a debate that we will have another day. But I do agree with you that there's a lot of good application for AI, and we shouldn't be as fearful as some people want us to be.
Yeah.
Michael, thank you. This has been a very insightful discussion. I've greatly enjoyed it.
Well, I've enjoyed my time here too. Thanks for having me.
Of course. Now for a bit of housekeeping. If you enjoyed this episode, please be sure to share, like, and subscribe, and we will catch you with the next one. Thank you.